Welcome to my series of video tutorials on how to prepare Form 990-EZ information return for small tax-exempt organizations. I'm David McCree. I'm a CPA, and you can find me on the web at myform990ez.com. In this video, I'm going to show you how to create a basic balance sheet from scratch. Let's say that this is your first year as a nonprofit organization, and you have a check register that shows the checks that you wrote and the deposit you made, or perhaps you just keep your check register like on Excel and you show your income and expenses on Excel. This is going to show you how to create a balance sheet for the Form 990 EZ, because you can't just list your income and expenses, you also have to have a balance sheet. So on the screen, what you see here is you see kind of a working summary of documents that you're going to need to gather together. And then over here, this is just a balance sheet that I had mocked up for a different video, and we're just going to plug the numbers in there so you can see how they actually work on a balance sheet. Okay, so the first thing you're going to do is figure out what you own, and then you're going to figure out what you owe. So what you own will be, you're going to, I'm sure, have a bank account or two, and so you're going to go grab your bank statements and you're going to make sure those are reconciled. So if, for instance, if you have some checks that you wrote that have not cleared the bank yet, you want to make sure that you subtract those from the bank statement. If there's any deposits that you made that haven't shown up on the bank statement, you want to make sure that you add those to the bank statement to come up with the proper amount of cash that you have. If you have a savings account statement, a CD, money market, anything like that, find out what your balance is on the date of the balance sheet, which is going to be December 31st in this case. Then you're going to figure out what else you own. Did you buy during the year, your first year, did you buy a computer, printer, desk, office furniture, anything like that? If so, you want to find your invoice for that so you know how much to put on the balance sheet. How do you know whether to put something on the balance sheet or not? Well, generally, if it's something that's going to last you more than a year, and if it costs more than $1,000, it's best to go ahead and capitalize it on the balance sheet rather than to just write it off as an expense. Next thing you want to do is you want to look to see what you owe. Do you have a credit card? Do you have a loan maybe from the founder to help you get started up? Something like that you owe to someone else. You want to find out how much you owe them on the last day of the year. All right, that's the date of the balance sheet. So in this case, we have a checking account that has $15,000 in it, a savings account that has $20,000 in it. So we have a total of $35,000 in cash. We have a computer that we purchased for $2,500, a printer for $500, and a desk for $1,000. So we have $4,000 in office equipment. Add those two together, and we have $39,000 in total assets. We don't have any other assets. This fictitious company here doesn't own a building or anything like that. We have a credit card, and as of December 31st, we owe $1,500 on it. We have a loan that the founder made to us. The founder loan is $3,000, a zero-interest loan. And at the end of the year, we still owed the founder $3,000. So we have total of $4,500 in liabilities. And if we subtract the $4,500 in liabilities from our total assets, we come up with $34,500 in net assets. So this basically is your balance sheet. Okay, you just created a balance sheet. So what we can do is just transfer some of these numbers over into this balance sheet, and we have cash $35,000. We have land, buildings, and equipment of $4,000. Gives us total assets of $39,000. We put in our credit card of $1,500. Put in our loan from the founder that we owe the founder $3,000. And here we go. This confirms for us that our net assets are $34,500, and our liabilities plus net assets $39,000. Okay, and that equals our total assets, so we know that we are in balance. Now, one of the things you'll notice is that net assets here is kind of an afterthought. It's kind of a plug number, we used to call it. Okay, once you figure out your total assets and your total liabilities, you just subtract one from the other and you get your net assets. Okay. Now, how does this actually look on the Form 990EZ balance sheet? If we were to take these numbers and transfer them to the Form 990EZ, this is what we have. $35,000 in cash on line 22, no land and buildings on line 23, $4,000 in other assets on line 24, that was our office equipment. Total assets, when you add the cash and the office equipment, $39,000. Then our total liabilities were $4,500. That was our credit card and loan from the founder. And then our net assets are going to be $34,500. And you'll notice if you add lines 26 and 27 together, it equals total assets on line 25. That's how we know we're in balance. We're also going to need to check this box up here because we do need to attach an explanation, a description on Schedule O for our other assets and also for our total liabilities. Okay, so this example was fine for the first year, but what about in the second year or subsequent years? Well, this equipment that you capitalized is going to have associated with it some accumulated depreciation. So you have your $4,000 here in equipment, but you're not expensing it all in 1 year, so you're going to expense it gradually over a period of several years. So when you're calculating depreciation on these items, the IRS does not require you to use any particular type of depreciation. Essentially, most nonprofit organizations use straight line depreciation. Okay, so to calculate depreciation here, we've got $4,000 and we're going to depreciate that over 5 years. So that's $800 each year we're going to write off as an expense. So for the first year, let's say that we did not buy this office equipment and put it in service until July 1st. So that's just going to be, in the first year, we're just going to take 6 months of depreciation. Okay, so that's going to be $800 for 1 year divided by 2 would be $400 in accumulated depreciation for the year. So this is how much expense we took, and it reduces the book value that we're carrying the assets on by the amount of depreciation that we took during the year. Each year this number will grow on the balance sheet as we expense more and more. So this has reduced our balance to $3,600 for our office equipment, and so we're going to do the same thing over here. We're going to put this just to keep these the same. And you'll notice that that also reduced our net assets by $400 because it's also an expense, and expenses reduce net assets. Okay. Now, how is this going to transfer to the Form 990EZ? Well, the only thing that's really changed here would be our other assets, because it's $400 lower now because of the accumulated depreciation. Of course, that changed total assets, and then it also changed our net assets, which fell by $400. You'll also notice that up here on line 21 net assets on page 1 has to be the same as net assets on page 2, line 27 of the balance sheet. Those two items must match. Also, we're going to need to, as you see here that I've checked this box indicating that we have an explanation on Schedule O for other assets and also for total liabilities. So let's have a quick look at Schedule O. Schedule O is simply a blank form that goes along as an attachment to the Form 990EZ, and this is where we put various explanations. In this case, you see that we titling our explanation here, Form 990EZ, page 2, line 24, other assets, just so the reader can know what it's referring to. There's our computer for $2,500, the laser printer for $500, the desk that we bought for $1,000, and then here's a notation of our accumulated depreciation. Okay, and if you add all these up together, they would come to the $3,600, which would match what's on the balance sheet for other assets. Also, here's our explanation for other liabilities, our credit card balance, and our no interest loan from the officer of $3,000, and this would match line 26, page 2, Form 990EZ. So I hope I have given you some valuable information here as far as being able to cobble together a balance sheet with just documents at hand. Understand that this works quite well for a small organization with just a few assets and a few liabilities. As the organization grows, it gets more complicated and it's more difficult, but it still works. Look forward for my next video, which will be, I'll have a video on net assets to explain more about net assets and how that works. And also, I'll be talking, I think, about accumulated depreciation and depreciation expense and how that works on the balance sheet as well. One more topic I want to cover quickly while we're on the balance sheet, and that is what assets go on the balance sheet. And I asked this question because not long ago I had someone tell me that they were their organization was renting a room in one of the directors' house to run their operation out of. So the charity was using a room in the director's home to carry on administrative and program activities out of. And they wanted to know, should we put the house or the room on the balance sheet? And the answer, of course, is no, because the house belonged to the director. It didn't belong to the charity. The only thing that goes on the charity's balance sheet are items which actually belong to the charity. Okay? So, for instance, if the computer and the printer belonged to an officer or director who was just allowing the charity to use it, then those items would not go on the balance sheet. Okay, because they still actually belong to a person, not to the organization. Now, if the officer or director or someone else donated the computer to the charity or the printer or the desk or what have you, then that office equipment would become the property of the charity and would have to be used for charitable purposes only. And then in that case, it would go on the balance sheet. Okay, so just remember, you can't put something on the balance sheet unless the charity actually has ownership of that. So I hope that's helpful. Good luck. Thanks for watching my video tutorial. If you need more help, you can find me on the web at myform990ez.com.